In this video, we are going to cover the analysis of the ES, NQ, and some other futures markets here. From the daily time perspective, guys, it is Thursday, July the 25th, 2024, and we've just wrapped up with Thursday's price action, guys, starting here with the micro NASDAQ. We had a total range on Thursday of 390.5 points. At one point, we were down over, what's that, 2.61% or 2,028 ticks, guys. The market opened up here, looking at the top left. The NASDAQ opened up at 19,258 evens, closed at 18,994 3/4. We reached a low of 18,883 halves. Guys, this is R Trades back here with another video. If you like this content, please make sure to like, comment, subscribe, and use the affiliate links in the description box below. It really helps me out when you use those affiliate links, guys. Apex Trader Funding currently running, I think, an 80% off sale. Go check out Apex Trader Funding by using the affiliate link in the description box below. Okay, guys, so starting here with the NASDAQ, we have 3 straight down days. And from an ICT perspective, guys, I've outlined a few of the levels that I'm looking at. So the first level to the downside that I'm looking at is the sell side liquidity located at 18,514 3/4. I think that's a little bit of a stretch for the market to reach on Friday, but ultimately, guys, I think the market might be looking at running on that sell side liquidity from the low that we formed on Friday, the 31st of May, 2024. Now, we do have a little bit of a market inefficiency ahead of that. So what do I mean by the market inefficiency? Just somewhere where the market traded this long wick inefficiency, where the market was inefficiently traded or price delivery was inefficient. Guys, if you don't know what inefficient price delivery means, I recommend going and checking out ICT's videos on the subject. So one of the levels that I'm looking at here from an ICT perspective is the 18,680 level, which is the consequent encroachment of a long wick inefficiency that we formed on Friday, the 31st of May. So the end of the month candle in May that traded through a buy-side imbalance, sell-side inefficiency, and then went all the way down to about the consequent encroachment of this wick here from Tuesday, the 14th of May. That launched us into another leg higher, guys. So that is something that I'm looking at there. Some other levels that I'm looking at here on the micro NASDAQ is I'm looking at the fair value gap formed between Tuesday the 4th of June, Thursday the 6th of June. That's a buy-side imbalance, sell-side inefficiency that the market came back down and redelivered. Now, in order for the market to rebalance that price, the market would need to come back up to the low here, which is 19,278 quarters. So, guys, I would expect that if the market wants to come back and deliver an efficient price, that we'll need to get back up to about that 19,280 quarters. Another level that I'm looking at is the consequent encroachment or the midway point of that fair value gap, which would come in at about 19,153 3/4. So as I'm looking at the NASDAQ, guys, here, the NASDAQ has been more beat up this week than the other products. Let's just have a look quickly here at the weekly time frame. Weekly time frame, guys, as you can see, we're coming into an ICT order block, coming into about the midway point of that. So that's something I'm looking out for as well. There is an ICT model that you all should be aware of called the Thank God It's Friday model. So if you're an ICT follower, let's have a look at what the Thank God It's Friday model would bring us to. So the ICT Thank God It's Friday model would have us touching 19,126 quarters, and it would have us touching the 19,241 3/4 level. That's a 30% weekly retracement. So if you're watching ICT models, that's something to look at. Guys, coming into Friday's trading action, I think it's important to mention that we do have economic news coming out Friday, July the 26th. We have Core CE Price Index, personal income month over month, and personal spending month over month. So that's something to be on the lookout for as well. If I had to predict or what my bias is coming into Friday, I think Friday we're probably looking at the market running on Thursday's low. So I think that Friday's candle, just looking at what I'm seeing here, I think these 3 candles are pretty inefficient. So I think that Friday's going to make a new low, but I don't know if we make it all the way down to that 18,680 level, although that is the first sort of level that I'm looking at. If we do have a rally on Friday, I'm looking at a small candle, maybe 19,153.75, which is the midway point of this buy-side imbalance, sell-side inefficiency. So, guys, that's what I'm looking at here on the NASDAQ. If I had to put in a bias for Friday, I would say probably another down day, but I wouldn't be surprised if we get something of a relief rally on Friday. Okay, guys, let's have a look over at the ES futures from a daily ICT perspective. So, guys, again, 3 straight days down. We did try to rally here on Thursday, and then we sold off in the PM session, which brought us through this old buy-side imbalance, sell-side inefficiency. Now, in order for the market, now that it's re-delivered that price, in order for the market to come back and rebalance, we would need to see a move higher up to about 5,004. What is that? The low of this candle, 5,472 3/4. So, wouldn't be surprised if we get something of a rally in the overnight session. In terms of the levels that I'm looking at here on the levels that I'm looking at on the just change this real fast, guys. Wait, 50%. Okay, guys. Some levels that I'm looking at here on the ES is I'm looking at a long wick inefficiency, which came back from this candle. I'm also looking at the mean threshold of these 2 black candles. So reason for me to believe that the ES is going to want to come down to probably the 5,424 3/4 level, potentially also getting us down to the 5,417 quarters level. That would take us into this order block from the 6th of June and the 7th of June, and it would also take us into this long wick inefficiency. In terms of the ES having a sell side target, I'm looking at the sell side liquidity at 5,394 evens, which would also be in this old buy side imbalance, sell side inefficiency. Now, if the market were to rally on Friday, what are some levels that I'm looking at? Well, I'm looking at the 50% point of this long wick here, and that's 5,508 quarters. That would also bring us back in line with coming back into this trading range here. And it would also be the inversion of the long wick from Tuesday, the 2nd of July, 2024, guys. So the market on Thursday traded through this old buy-side imbalance, sell-side inefficiency. I would expect that maybe in the overnight session, I think we are going to see a little bit of a rally. And my target on that initial rally would be the low from the Thursday, the 13th of June candle, and that would come in at 5,472 3/4. So if we are going to get a rally in the overnight session, my first target is right here, 5,472 quarters. If we don't get a rally, guys, then I'm just looking at the 2 levels that you see here listed on the screen. That's 5,424 3/4 and 5,417 quarters, and order block mean threshold, and then a long wick consequent encroachment. Okay, guys, let's have a look. I also want to add, let's have a look at gold. Okay, guys, so it's going to take me just a minute to draw out the gold chart. So what I'm currently doing, guys, is I'm adding on some ICT levels. I'm just adding on some levels that I would be looking for. From an ICT perspective. Okay, guys, so in terms of gold, I think that the first level of interest is going to be the mean threshold of this fair value gap. That'd be 2,351.1. If gold were to rally, some of the levels that I might be looking at would be first, I think, I think the first target, if gold were to rally on Friday, that I'd be looking at is that 2,385 halves. Second target, I don't think we get there on Friday, but if we were, second target to the upside I'd be looking at is 2,404 spot 3. Downside targets, first target that I'm looking at is 2,351 spot 1. That is the midway point of this buy side imbalance, sell side inefficiency. After that, guys, I'm looking at an order block here. The midway point of that is 2,340 spot 1. If gold were to have a significant down move on Friday, then there is sell side liquidity or an old low located at 2,327 spot 7. Looking at the gold chart, I think we are going to get something of a relief rally on Friday, although can't guarantee that. Okay, guys, finally, let's look at crude oil. And it's going to take me a moment here to draw out the crude oil chart. But whenever we're starting with an ICT chart, we start with the buy side and sell side liquidity, and then we work our way from there. Okay, guys, so first level of interest. First level of interest on crude oil, if we were to have a little bit of a sell-off, is $77.48. And what that is, that's an old buy-side imbalance, sell-side inefficiency that the market has now traded through and rebalanced. Second level of interest would be the midway point of Thursday's candle, which Thursday we saw a little bit of a relief in the crude oil price. So on Thursday's candle, my second downside target would be $76.77. That's 76.77. My next target to the downside on crude oil would be the low that we formed on Thursday, running on that low at 76.03. I don't really foresee the market doing that, but it's, anything is possible. And then in terms of upside targets, guys, I'm looking at an old sell-side imbalance, buy-side inefficiency here that the market has left open. So if the market wanted to trade higher on Friday, my target would be $79.89. So depending on where it looks like crude oil wants to go, those are some of the levels that I'm looking at. Okay, guys, in this video, I gave you the daily breakdown here of the ES, the NQ, crude oil, and gold. I hope you enjoyed it, and we'll be back on the next video.